Yeah, my name is Lance Martin. I own and operate a small real estate company in Riverside County. I also have offices in LA County, San Bernardino County, and for a short period of time had an office in Orange County. So I want to start the same place where Aaron started, except on a little different twist. Who was late getting here this morning because of traffic? No, not that many. Okay, well, a couple of you that I know. And anyway, I live in Riverside. I live about 3 miles from here, but this morning I came from the Coachella Valley. I was doing some business out there, so I got up at 5:30 so I wouldn't be late. My GPS said I was going to get here around 7:30, and I got here around 8:15. So anything we can do to support Jeff and his efforts will be appreciated, certainly from my perspective. As Jeff had said, I'm here to talk about housing, okay? And Jeff had indicated the population growth in Riverside County is increasing. You saw the numbers. Aaron had said the same thing. And as part of my introduction, Jeff was like, well, where are we going to put these people? We got to figure out how to get them here transportation-wise, but we also got to figure out where we're going to put them housing-wise. So hopefully I'll be able to give you a little perspective on that. I do have a QR code. You can snap that now. I'll give you an opportunity to snap it later. I have a little symbol down at the bottom that says don't take pictures. You can take all the pictures if you want of the slides if you find them interesting, but there's no need to take any pictures. You already have all the slides. You can pull them up right now on your phone if you want those, and if I make any changes later on, you'll have those as well. So anyway, we're going to start off with housing. I should have probably taken a look at the program a little bit more thoroughly before I did that, because I noticed that the Greater Palm Springs, this is the Greater Palm Springs people. Are you in the room? A couple of you are here? Okay. As far as the sponsors are concerned, I was at a business meeting on Monday with the publisher of Palm Springs Life magazine. And if you've ever stayed in a hotel anywhere in the Coachella Valley, the chances of going into your room and opening up a Palm Springs Life magazine is 100%, because they seem to be in every single hotel in the Coachella Valley. Having said that, our conversation basically says, Lance, people think that the number one economic driver in the Coachella Valley is tourism. And he said, no, it's not. It's housing. I'm like, you're speaking my language. It is housing driven, and I would say, again, Dr. Chris Thornburg may come up here in a minute and say some other issues with that, and I'm sure he'll correct any mistake I make. But in my world, economic driver in Riverside County is housing. So much of what we do revolves around housing. So we're going to give you a little update on prices, supply, demand, the whole 9 yards. So we're going to start off with median price in Riverside County, just to talk about what pricing has done. Now, I also noticed on the little chart, the county put out this thing that says median price in Riverside. I don't know if that's median, could be average. There's a whole bunch of different ways to slice these. One thing with these numbers you got to be careful on is I've got a median sales price in Riverside County of $597. I very easily could have given you one that said somewhere around $630. This one says $635. The reason my numbers may be a little bit different is I'm looking at single family residential. You throw in condos, the number goes a little bit different. You take condos out, it gets a little bit different. But these numbers are about as fresh as you can possibly get. I ran these last night. This is as of November 30th. So this number is 5-6 days old. So the median price in Riverside County is, let's just call it $600,000. That is up. The green arrow is the 3%. The 3% references 12 months ago. So in the last 12 months, property values in Riverside County, in single family residential, all types, are up 3%. We'll talk a little bit more about that later and what that means and whether that's a good thing or a bad thing. Now, everywhere where you see a chart that's got a little clock spinning around means I don't have time to go through that today. They've given me 25 minutes to do this presentation justice. It'll take me an hour, okay? So I'm not gonna click into that, but again, you guys already have access to this presentation. You have it. So if you're a data junkie and you want to click around and you want to look at more data, after this presentation's over, you can click on that little link and you can scroll over back and forth and you can see what the median price in Riverside County has done. And this chart goes back for 15 years. So if that's your jam, you got all sorts of data to take a look at that. Now, we are affordable. We've had a lot of discussions about pricing. We've had affordability issues. It might not, who feels like the housing right now is affordable anywhere? Raise your hand if are you feeling the affordability? Are you not participating? Are you feeling the affordability? Okay, it might not feel affordable, and we're gonna talk about probably prices have gone up significantly, interest rates have gone up significantly, but maybe we're just not looking and we're not feeling that affordability the way we thought. But everything is relative, so let's compare it. So where are we? Orange County, 1.3 million. LA, 972. There's Riverside. Wait a minute, Lance, that says 620, the other one said 597. On this chart, I threw condos in, the other I didn't, so that's why there's a little bit of a variance there. And San Bernardino at 550. The one thing I want to point out, and if you just compare the numbers, we are certainly more affordable than our surrounding counties, certainly LA and Orange County. I did not throw San Diego County in there, but San Diego County surprisingly tracks right there, right in between LA and Orange. More expensive, you guys realize that. And San Bernardino, maybe not quite so much. But the one thing I want to point out with the green arrows is you see appreciation levels in single digits. Orange County 6, LA 3, Riverside 2.4. And again, by the way, Lance, wait a minute, here on the little chart it says it's 4.1%. I'm assuming that's year over year. I could do this same exact chart a week from now. Its numbers are gonna vary. It's gonna be a point here, a point there. Let's not get hung up on that. But the bottom line is we are affordable. It's certainly compared to, I've lived in Riverside County for the last 35 years. I came out from LA County, from Long Beach. Why did I come out here? I came out here because it was affordable. Okay, it's the same reason people are coming out here now. So the prices are great. Supply and demand, we have a problem. Who's tried to buy a house in the last 5 years? Anybody? A couple of you? Did you struggle? Hopefully you bought one, but if you tried to buy something in the last 5 years, particularly prior to a year or so ago, you were probably competing against a whole bunch of people. We have a supply problem. Okay, we definitely have a supply problem. So let's talk a little bit about the supply and demand. I'm going to break this out in a couple of things. New listings. This data is 5 days old. New listings in Riverside County. These are single-family houses coming to the market for sale. This is a 15-year chart. If you just kind of look at the far right-hand side of that chart, it's low. Okay. Who's actually in the real estate business? Who's an agent, mortgage lender? Okay, so you guys know, I didn't see a lot of hands go up, it's kind of bright up here, but you guys know we have a supply problem. We've had a supply problem for a very, very long time. Having said that, we actually have more new listings that came on the market in the month of November, this November, than we did a year ago. 5.7%, give or take a little bit. So even though inventory is down, the supply is better than it was a year ago. Those are new listings on the market. I like that. I like it a lot. How about compared to the other counties? We are the only county, based off Orange, Los Angeles, Riverside, San Bernardino, that actually has more listings this November than we did a year ago. Why is that? I don't know. We'll let Chris tell you why that is. All I know is we have more active listings. These are new listings that came to market in the month of November. That's great. The sun is rising. By the way, who do I got to see? I'm taking this home with me. Is this awesome or what? You can't use this again, right? I'm definitely taking that with me. So when this is over, I'm putting that in my trunk. So anyway, we have more listings this month than we did a year ago in November. That's awesome. Not so much for the other counties. So is that a big deal? By the way, here's the 15-year chart. You can click into that if you're so interested in that. It'll give you 15 years worth of data. But I will pause on this. If you go back to 2008, look at the level of inventory that we had 15 years ago. Look at all those bottom spikes. Every one of those bottom spikes on that EKG generally represents the month of November or December. It's pretty typical. Real estate is seasonal, but we are at very, very low levels of inventory, but it's not as low as it was. So I'll take it. I'll take it on the new listing side. Now, I throw this next chart out here. This is all listings that are on the market in Riverside County. And I use this because some people are looking at this data and they're predicting bad things, okay? I'm not predicting any bad things, to be honest with you. There's a couple of charts in here. I would like to be improved, but generally speaking, there's a lot of positivity here as far as Riverside housing. Assume we need to build some stuff, and we'll talk about that in a little bit. But anyway, all listings on the market. We have 12.4% more listings today than we did a year ago. That's good. It might not feel like it if you're in our business, but that's good. I asked who was buying a house. Is anybody in the market to buy today? If I can see, anybody? One of you? Okay, Chris, and I know you, and he's an agent. She's not buying from me, so that's a bummer. But if you're in the market to buy today, you actually do have more selection than you did before. One of the challenges that we've had in this marketplace for a very, very long time is when I was ready to buy, I was competing against 30 other buyers. Did anybody experience that during COVID? A couple of you? That's generally not the case today. You might be competing against a few people, but you're certainly not going to be competing against 30. But anyway, we have 12.4% more listings today than we did before. That was a year ago. These are in comparison to what the other counties are. All of the other counties have more inventory surrounding us. Again, this is a good thing. I cannot sit up here and scream about I don't have enough houses to sell, and then when I actually have houses to sell, see it as a problem. It's a positive. So I'm very excited. And by the way, that doesn't generally happen this time of the year. This time of the year, we don't generally see increases in inventory. But that's all resale. Has no reference to new construction at all right? So this is the thing. Are we building enough houses? We are absolutely not building enough houses. Jeff's talking about population increases. Where are we gonna put them, okay? Aaron's talking about transportation pressures and all the rest of that. Where are we going to put these people? We've got the new electronic battery truck company coming into town with hundreds or thousands of people. Where are these people going to live? Ideally, they're going to live close to where they're working. We need more houses. So to that degree, who's building houses? And again, I made another mistake. I should have looked at our sponsors. Is it Meritage Homes? I don't have a slide for you. I should have put you on my slide. My bad. So they're building houses. I'm assuming they're building them in Riverside County. Well, Cahovians, anybody from Cahovian here? You guys are building houses. Thank you. We definitely need more housing in the county. Lennar is building houses. I'm going to briefly point out the interest rate special that Lennar is showing. We're going to talk a little bit more about that later, but you'll see that 4.5% special fixed rate for contracts signed this year. Who would like to buy a house with a 4.5% fixed rate mortgage right now? What are you waiting for? Let's go. Okay, again, we'll talk a little bit more about that. It's important, it's very important. So Lennar is building, it's out in Palm Springs, beautiful community. I looked at it about 2 weeks ago. Pulte, awesome homes, building here in Riverside, great, love that. We've got D.R. Horton. By the way, what do we see on that slide? Special financing. I know you liked the 4.5. Who would still like to buy a home at 5%, 5.25%? I'm assuming those same people would be very happy to buy that. Well, D.R. Horton has special financing out there right now. We'll talk more about that as well. It's a big, big deal. Okay, I'm gonna go back into some charts. This is the most painful part of this entire presentation, especially if you're in my business. If you're a buyer, you're a seller, you're just a general homeowner, or you're just kind of on the periphery of the real estate business, this might not feel as painful to you as it is to people that are in the business. And this is pending sales. The little handshake there represents buyers and sellers coming together and opening up escrow and gonna sell a house. So what's going on with pending sales? I told you listing inventory was up. I told you prices were up. Well, pending sales in Riverside County are down 13% year over year. Brutal, okay? So why is that? Let's just take the easy one. Maybe interest rates are a little challenging right now. Maybe we do have a little bit of an affordability issue there. However, let's compare that to our surrounding counties, okay? 34% fewer transactions in the month of November in Orange, 27 in LA County, 25% in San Bernardino. So even though Riverside County has a negative number, it's a smaller negative number than the surrounding communities. And I think that's because not only are we still affordable, I think we're more attractive in other ways. So still a very, very attractive place to live. But again, the pending sales, that's rough. If you're in my business, that's rough. Again, I'm not gonna click on this. We don't have time for it, but there's a 15-year chart of pending sales. I will pause on this chart here for a second. Boy, that far right-hand side, or your far right-hand side of that chart, your eyes are not deceiving them. That is the lowest level of transactions in the last 15 years. Depending upon who you're talking to, it's the lowest level of transactions in the last 30 years or 40 years or ever. All I know is I've been doing this for about 35 years. I've never seen it like this before. So we got to change accordingly. But anyway, there's all sorts of data in there. You can take a look at those pending sales and see where that goes. So again, record low sales volume. So why is this happening? What's going on with this? Actually, before I tell you the why, this is why if you're concerned about that, because this is the time of the year that everybody comes out of the closet with gloom and doom, and the narrative is the world is ending and market's going to crash. Who believes the real estate market's going to crash? Who's brave enough? Come on. Nobody thinks the market's going to crash? Well, I'm calling BS on that. There's more than a few people in this room that think the market's going to crash. And there's certainly a lot of people on your Instagram and Facebook feed that are predicting market crash, because there's always predicting market crash, especially about this time of the year. Let me tell you why that's not going to happen. Because even with record low open escrows and new inventory, this is the days on market chart. Now, granted, it's 31% higher than it was a year ago, but the average day on market to sell a home in Riverside County is 29 days. That's nothing, okay? A year ago, I guess it was around 20 days. Big deal. The difference between 20 days and 29 days is nothing in my world. So when if you list your house today for sale and you price it right, which is a fair price, it's gonna be more than what you bought it for in most cases, you're gonna have your property in escrow in 30 days. Yeah, but Lance, I do have my house on the market, and it's been, okay, it's Christmas, I get it. We might be a little slower, but on balance, we're still at a 29-day average. How about month's supply of inventory? Month's supply of inventory in the county is 3.9 months. Month supply is very simple. That basically means if we didn't list any more houses at all for the next 3 months, it would take us 3.9 months to sell everything that's on the market. That's not a big number. Now, if you want to compare it a little while ago, the number was a month, okay? Back during COVID, it was 2 weeks. We're selling everything ridiculously fast, which we'll talk about in a minute as well. But the bottom line is a 4-month supply of inventory in Riverside County or any county is healthy. I don't know, I always quote this. It seems a little meaningless, but I'll quote it anyway. According to the National Association of Realtors, a healthy market has a 6-month supply of inventory. I cannot remember, well, actually, I guess I can. Looks like it was probably about 10 years ago is the last time we had a 6-month supply of inventory in the county, all right? So what does all of that mean? Hey, Adam, nice to see you. It means we got no crashes. There's no crashes, there's no price declines, there's no drama, there's no bad news overhanging the real estate market. We can talk about interest rates in a minute, but we certainly have a market that is stable, certainly more stable than it was before. So if you're thinking about real estate as an investment and you can afford it, okay, then relax, buy real estate. I was telling people who had an opportunity to buy real estate 4 or 5 years ago when interest rates were 3% and did not. And did not. Thank you for being honest. You're kicking yourself right now, aren't you? I was screaming at my friends and my family and my clients. They're like, oh no, the market's gonna crash. Prices are too high, it's too hot. I'm like, it doesn't matter. The money is free. It's 3% interest rates. And then we all know what happened after that. So anybody who's predicting gloom and doom and crashes in the real estate market, in my opinion, they're just missing it, especially in our marketplace. Maybe there's something going on in Austin, Texas that I don't know about, but we'll leave that be. Okay, let's segue a little bit into the rental market. Anybody want to raise their hand? Are you a tenant? Any tenants in the room? Okay, I got a couple tenants in the room. Are you paying more for rent today than you were a year ago, 2 years ago, 5 years ago? Yes, you are. In some cases, you're paying double, okay? Which is another reason that the real estate market on the valuation side is very healthy, because you're gonna trade a payment of X for a rent of maybe X. So the rental market, by the way, I didn't want to click back on that slide, red button, but I'm not gonna mess with it. There was a little tag on there that said majority markets. I don't have the slide, maybe Chris has it. If not, we can give it to you guys at a later date. A large percentage of the state of California and any given city have been transferring over from a majority of homeowners to a majority of tenants. That is happening nationwide. We are becoming a renter community. I'm not saying that's bad because, frankly, we do property management. 10-second commercial for Cobalt Property Management. I got both of my boys here, Drew and Drake, that work with me. We do property management. I love property management. But on balance, I think we all would agree that probably home ownership's a little bit better. Okay, well, let's build some houses. That will help. But at any rate, our vacancy rates basically are zero. Any landlords in the room? If you're a landlord in the room, you're probably very happy. You should be happy because for the most part, your rents have increased far beyond what you would have expected them to increase 4 or 5 years ago. By the way, Aaron was talking about government policy. God forbid I segue into government policy. One of the reasons our rents have gone up so high is because we thought it was very smart several years ago, 2020, pre-COVID, to initiate a rent control in California. Is everybody aware that the state of California has rent control statewide? We have rent control statewide, and we've had it for 5 years. It's not just in Santa Monica and those rent control areas. We've had rent control in the state of California for 5 years. Now, a lot of factors have caused our rents to increase over the last 5 years. In my opinion, that was one of them. And by the way, what was that supposed to do? That legislation that was passed 5 years ago was supposed to keep rents lower. I know, somehow we seem to miss the mark. Good intentions to fall apart. But at any rate, vacancies are zero, basically. Basically zero. Anybody familiar with Moreno Valley, with this project? It's been in the news a lot lately. I don't know if anybody here from Highland Fairview or Ido Benzivi's crew is here, but they are building a project in the heart of Moreno Valley, 15,000 residential units. Now, they're all apartment units. I'm hoping that when this thing starts going and starts moving forward, some of those apartment units will become single-family units and we'll actually maybe see some homes that can be sold or whatever it happens to be. But this is the type of development that we need throughout the entire county. Now, again, I would prefer these to all be for sale, but there's 760 acres in the southeast section of Moreno Valley. It's going to bring 15,000 residential rentals into the community, right in between the two hospitals. You got Riverside University Health System at the north and Kaiser down at the south. Going to be a beautiful downtown center. If you guys are not familiar with it, the QR code that was on my presentation, scroll down a little bit, it has all the information on it. We need more of this. Again, I would prefer them to be, maybe half of them be houses for sale, I would, but these type of developments we need. I put a picture of that sign up there. If it looks a little old and ratty, it is a little old and ratty. I don't know how old that sign is, but this project has been in the development stage for almost 20 years and 10 years just trying to get through this system, okay? It's too expensive to build, too many overlays, too many restrictions, too much entitlements. If the builders in the room, now we're building, why are the builders building more houses now? They're building more houses because it makes sense, okay? Now, they didn't like those interest rates, so what are they doing? They're buying those rates down. It didn't make sense to build before. Prices were too low. I know that's hard to stomach. Prices were too low. Entitlements were too high. It didn't make any financial sense for them to build these houses. So the builders that are building, I highlighted a few of them. That's awesome. Let's talk a little bit about interest rates, okay? To me, I have been completely obsessed with interest rates now for about 5 years. Probably a little bit longer, but it was less obsessive when interest rates were at 3%. I didn't obsess about them. I was like, wow, look at this. I've been doing this for 35 years. In 1988 or 87, I think it was, I'm a brand new real estate agent in the business. I'm 20 years old. I roll into the office and my broker calls everybody over and says, interest rates just broke below 10%. Go out and sell everything you can because we're never going to see interest rates below 10% ever again. That was 1997, okay? Now, some of you are in the room, have the stories of the 18 and 19%. My mom and dad were in the business. My grandmother was in the business. I have all those stories as well, but I didn't live those stories. But I lived the story of 1987 when interest rates broke 10%. And by the way, my broker was wrong. Did interest rates ever go back above 10% from that date? No, they did not. They've continued to come down. National Association of Realtors came out several years ago. This was, I don't know when exactly it was, probably 2008 or 9 or whatever it happened to be. I think rates at that time were about 6%. And they said, we've got to get rates below 5 and everything will be fine. I'm like, okay, well, we got rates below 5, and I don't know if everything was fine or not, but these rates are crazy. So let's talk a little bit more about rates, and I'll give you my 2 cents worth. Okay, that's Chairman Powell of the Fed. I'm obsessed with him. I'm obsessed with everything the Fed does. If you're following what's going on with the Fed and you're thinking about how that's going to impact mortgage rates specifically, you're like, yes, finally, we're starting to see these Fed funds rates being cut, 0.25% here, 50 basis points there. We're all excited. Well, you got to be careful with that excitement. And we have any lenders in the room? I know there's a couple of you because you're my guests. Okay, we got a couple lenders in the room. We all know the Fed funds rate and the 10-year bond and mortgage interest rates are kind of all tied together, but they don't necessarily run together at the same time. So when you see the Fed coming out, cutting rates, and then you immediately go over and say, great, I'm gonna be able to get a lower interest rate on my home. And then you look a week later and like, well, shit, that didn't work out very good. My rates, now it's higher than it was before they did the Fed funds rate. Did that happen? Yes, that just happened. That's what's happened in the last couple of months. So if you're following this stuff, I've got a wonderful resource for you. You can click into this link if you download you don't even have to download the presentation, just click the QR code. Mortgage News Daily puts out a very simple app. It is free. It can reside right on your phone. It'll take you 3 seconds to click on it. And there's 2 numbers on that you can look at every day that you want. The upper left-hand corner that was yet last night. I don't know if that's close. These are averages, by the way. If you have bad credit and no income and you have all sorts of bruised issues within your financial history, you're probably not gonna get a 6.8% rate. If you've got dynamite credit and you're awesome, well, you probably could do a little better than a 6.8% rate. But anyway, you got the rate up there, and then that little circle down at the bottom, that's the 10-year bond. 10-year bond controls everything as in relation to rates. Chris will probably come up and talk a little bit about the spread and what's going on with the spread and what that means. But if you're in this market right now and you want to see what's going on with interest rates on a moment-by-moment basis, this is your resource. It's absolutely free. You certainly don't need me to take a look at that. Okay, I want to take a look back a little bit. I'm going to pause here for a second because Chris Thornburg's going to come up with Beacon Economics here, and he's going to, by the way, who's never seen Chris speak? You guys are either not listening or you've all seen Chris speak. Wow, okay, well, let's assume you've all seen him speak. That's a testimony to Chris and Beacon Economics because they're awesome, okay? I've been following this guy around for about 12, 13, maybe 15 years. I've seen him speak probably no less than 100 times. Sometimes I'll see him speak on February and I'll go see him speak again in March, because he's right and his data is correct. So if you're here specifically to see Chris because you want to know what he has to say, quite honestly, that's why I'm here, okay? It is, that's why I'm here. Chris and I have done a whole bunch of forecasts and events in the past. He's spot on. How spot on is he? Let's take a look. Chris and I have done a market forecast together, my market forecast I've done for, I guess, 14 years or so. So this was March of 2021. By the way, that's me. Did I really look like that? Holy, that's about 50 pounds ago. So at any rate, so that's me 3.5 years ago. And this next video, it's about 1.5 minutes long, is Chris with his forecasting hat on. So listen to this. 24th, let's say, of March, even though we're pre-recording this, so we're a few days early, and we're in the low 3s. Any idea where we're going to be at the end of the year rates?
I think rates are going to continue to drift up. Like 10-year bond rates are coming up. Yep. You're talking about again that return to normalcy.
Right.
The federal government's going to be absorbing a lot of free cash out there. $4 trillion in issuances this year.
Okay.
That also suggests interest rates are going to continue to go up. Now, what do we come into this at? You could probably get a mortgage in the 4% range coming into this.
I think a year ago, around 4.
I anticipate by next year we'll probably be back to that 4% range.
So
now the question is what happens beyond that. Then that, of course, has a lot to do with inflation. And the federal government and everything else. But I would argue that if they don't do much, heat up inflation, you could get back to 6 or 7% mortgage rates in 5 to 6 years.
Oh,
yeah.
Well, there you go. There's the quote.
It's possible.
The audio from where I'm sitting is horrible. Could you guys hear that okay? Okay, I could barely hear any of it, but I've seen that 1,000 times. That's a recurring nightmare. when that played, my reaction at the end, yeah, that is me. I'm like, oh, there's the quote. If you heard the beginning of that, this is March 2021, kind of like in the middle of COVID or maybe starting to maybe come out of COVID there a little bit. I said rates are a little bit above 3%. And we had basically been in that 3% range. And I'll talk about how awesome that was, because it was awesome. And then Chris says, hey, maybe by the end of the year we'll be at 4. I'm like, hey, that's cool. I can do 4. I mean, 3's great, but 4's awesome. We can do 4. And then, a few years down the road, maybe we'll be back at 6 or 7%. That was unheard of. Nobody in 2021 was saying we're going to see 6 or 7%, except maybe my videographer, Adam, said we were going to be at 10. Okay? But nobody else that I know and trust was predicting that. Mortgage Bankers Association, nope. California Association of Realtors, nope. National Association of Realtors, nope. Everything's fine. So Chris comes out, and I literally like, really? Okay. Now, the next year, Chris and I got together again. And by the way, we're in studio. This was during COVID. We couldn't have meetings like this. So a year later, in 2022, this is a little shorter clip, so listen, very important. So this is Chris a year later.
Real estate itself, look, if you look at affordability, real estate's still affordable once you account for interest rates. But if interest rates get to 7%, well, housing is no longer affordable.
Ooh. That was 2022. If interest rates get to 7%, housing is no longer affordable. Now, I had a slide 5 or 6 minutes ago that said Riverside County is affordable. It is, compared to LA and Orange and some of the surrounding communities. But let's face it, it is tough. With these price increases that we've seen and the interest rates where we've seen them, Chris's statement in 2022, we're at 7%. Housing is no longer affordable. True? For a lot of people, that's true. Can I get an amen from my lenders in the room? Okay? We do a lot of business within our office. We are in no need of buyer demand. Our phone rings off the hook from various sources. I want to buy a house. Can you show me Main Street? And they know what the price is. They know the price is $630 or $820. I want to see it. I want it. The phone rings and rings and rings. We send them over to our preferred lender. Our preferred lender says, can't do it. They cannot afford at 7% or whatever the rate is, which basically right now we're basically at a 7% rate. So are home sales connected to mortgage rates? Yeah, 100%. But this is the deal. The challenge that we have, and my comment about the market breaking at 7%, our market is broken. Make no mistake about it. The real estate market has been broken for the last few years. But that doesn't mean, I got to be careful when I say that. Prices are fine. If you own a house, you're fine. You're probably very, very happy. If you want to buy a house and it's in an area that you want to, I got some beautiful houses. I mean, there's some beautiful stuff out there. If you can afford the payment, or heck, go to our builders who are offering buy downs, 5.5%, 4.5%. If you can afford that, you need to buy a house right now. The part that's just broken is the way the inventory cycles run. Okay, the way the inventory cycle, who owns a house that has a 3% mortgage on it that has no intention of selling that in your lifetime? Okay, I finally get people to raise their hands. I guess I was asking the wrong question. That is what's broken, okay? Because, and by the way, I do too, and there is no way in the world I'll ever sell that house. Anybody who has real estate, whether you like it or not, with a 3% mortgage, you're keeping it. You might not want to live in it, but you're not going to sell it. What are you going to do? You're going to rent it, okay? So let's talk a little bit more about these housing. This is a friend of mine who's with LGI Homes, Annalisa, is it Cheney? I've never said her last name before. Anyway, she is new home sales out in Bermuda Dunes next to Indio. And look, again, we talked about this earlier, but I want to highlight it. These are brand new houses. They've been open for, 9 months, maybe. Everything they build, they sell. So it's affordable. Riverside County, it's in the $550,000, $600,000 price range. They're beautiful. But look at the financing on that. Look at the financing. Now, can she actually produce a 3.5% interest rate? I don't know. That was posted on Facebook 10 days ago. So But I showed you those other builders who are offering 4.5% and 5%. It's very, very attractive. I'm going to pause here for a second. Does anybody right now have their house actually listed for sale? Wow. I should leave right now. Statistically, everybody pay attention. Is there anybody in this room who has their house listed for sale right now? You don't count. That's Chris. 0. That's the problem. That is statistically, at least 7, 8, 9% of you should have, 30, 40, 50 people should have raised their hands, okay? That's nuts. But if you did, well, maybe you said, well, I don't want to sell my house because I can't replace it with a mortgage that's close. Well, maybe you want to look at some new home construction. You know, sell your house. What I was going to say, if you did have your house for sale and you're having trouble, talk to your lender, talk to your agent, say, hey, maybe I offer a buy down. A regular seller can do the exact same thing that these home builders are doing. It's going to cost you some money, but instead of paying closing costs or reducing price, you're going to throw multiple thousands of dollars towards the lender. You're going to buy that rate down. You can do that. This is not an exclusive game for the builders. Chris and I were talking about this yesterday or the day before, and there may be some overhang with that needs to be dealt with. But at any rate, interest rates are key. They're so important to what we do. Now again, I don't have, by the way, what does this 10:20 mean? Is that how much time I have left? That clock hasn't like moved. It just keeps, what's that? Well, that's what time it is right now. Am I over? Oh my God. I've been looking, wait, where's my countdown clock? Okay, I'm gonna go super fast. Thank you. Why didn't you throw something at me? Goodness gracious. Okay, so interest rates, Jerome Powell. There's 4 videos here. I do not have time for them, so I'm gonna buzz through them really, really quickly. You can watch these later. They're on mute, watch them. They're awesome. It'll give you a very clear understanding of what the Fed has been doing and what their goals are. I love Judy Shelton. If you've never heard of Judy Shelton, Google her, listen to her. She's awesome. She has a complete understanding of what's happening. I'm gonna close in 2 minutes. This is my 10-year chart of interest rates. That's COVID in the middle. I loved COVID. It's not meant to be a joke. From a business perspective, COVID was awesome, okay? Business was off the chart, but it was a huge problem because property values went up 40% in those period of time because interest rates were free, 3%, okay? That market was hot, all right? Then interest rates go up and our current market is frozen. We're in this state of just kind of, very difficult to move forward at rates the way they are right now. So 5.5, supposedly somebody has come up, I think John Downs had said 5.5 is the magic interest rate for real estate market to recover and heal itself. I have no idea when, if ever, we're gonna see a 5.5 interest rate. Chris is gonna tell us probably not anytime soon, but I'm okay with that. So this is my forecast. There's no foreclosures, there's no gloom and doom. We're fine. The market is fine. It would be nice to get a little relief on interest rates and get affordability up a little bit more. So this is my forecast for 2025. Prices will increase in Riverside County. For the most part, prices will increase in Southern California. Not a lot. I'd like to see some low to mid single digits. 5%, give or take, would be awesome. We should see more inventory. It's very easy for me to say that because we have such a low inventory level right now. So inventory should increase. Sales volume, transactions coming together. Again, we're record lows. It should come up. So if your business is tied to this, that'd be great. What I would love to see, and I don't think I'm gonna hear it from Chris, but I would just love to see interest rates around 6.5 for the next year. If they floated a little bit below that, that'd be fine. Because when interest rates did drop below 6.5, 3, 4, 5 months ago, we actually were recovering. It was awesome. So again, if you like the information you've got, you can follow me on this thing. I do this exact same thing every month. You just follow me, follow the QR code. Thank you very much. And Chris, you're next, or Jeff is next. Introduce Chris. Thank you guys, appreciate you.